when FDIC lets banks hold Bitcoin on their balance sheet, right? At that point, you won't have these headaches, but you will be paying $500,000 a coin or $1 million a coin. And so be careful what you wish for. Let's look at the last 12 months. Bitcoin is up 352%. Gold is down 7.5%. The S&P is up 34.1%. NASDAQ is up 41%. Long-dated treasuries, if you held them, down about 7%. We have a year of unprecedented political unrest and political risk. And clearly, we had a lot of monetary inflation. You have meme stocks, individual cryptos and individual stocks, of course, that are all over the place, and some of them screaming. But I think there are some conclusions you can come to if you look at asset classes. The first conclusion is that in the biggest year of political unrest and inflation in our business life, gold is a complete, abysmal, utter failure. Complete, right? Yeah. And so you could just start with that observation. Gold is a complete, utter macroeconomic failure. And if you waited for 40 years for a year like this, you finally got it, and it was useless. On the other hand, we knew that long bonds are overvalued, right? So bonds and gold as asset classes are just looking scary as heck. And you've got a conventional inflation hedge. If you want low risk, conventional monetary inflation hedge, you buy the S&P index. If you want a bit more edge, you buy the NASDAQ index. 34% on S&P. It implies to me that the monetary inflation rate or the debasement rate is 34%, plus or minus, the risk premium. Maybe it's 31% with a 3% or 4% risk premium. But if I had to guess, well, what's the inflation rate? I would say, well, CPI is 5%. And producer price indexes, if you talk to anybody that manufactures or does anything in the real world, they'll tell you their costs are 20 to 25%, 30% more. And if you look at the S&P index, it's screaming at you 30% inflation, and Bitcoin's beating by 10x that. Now, what do I think about risk? Well, I think that over the course of a decade, Bitcoin's 170% a year, every year for a decade. NASDAQ is 19% every year for a decade. And the S&P is 14% every year for a decade. Oh, and gold, by the way, you'll love this one, minus 0.06%, minus 6 basis points a year, every year for a decade. And long bonds, 240 basis points. I mean, the conclusion you come to is pretty clear. If you can stomach the volatility and the novelty of Bitcoin, you're getting paid 10x. If you can't stomach it, you sit in the S&P index. And, the other things are speculative. And if you're a VC or a speculator or a trader, you can deal with that. But the reason I think that Bitcoin is compelling is, first of all, it's pretty clear that gold is broken. Bitcoin is digital gold. It's not broken. And so we know that it fills the niche of digital gold, and there's going to be an avalanche. There's $10 trillion still sitting in gold, right? If you're still believing in gold after a decade of minus 6 basis points, you just must not like money, right? Either you don't read charts, how many years of your life are you going to wait and fail before you admit it doesn't work? Because if I walked you into a house with no electricity for 10 years, I think you'd figure out that you can't turn on the lights at some point. So the first issue is gold is busted. And I think the second thing that's compelling about Bitcoin is the big tech trade looks crowded and overdone. I mean, if you go and you pull, what's Amazon stock right now trading at? It's Amazon's at 33.84, and that's exactly where it was a year ago, Brett. Okay, so with big tech, it's like the real question here in an inflationary economy is where's the risk? Apple's got supply chain risk. They just cut their iPad manufacturing in half because they can't get chips. Amazon's got unionization risk. What happens when 1.5 million people unionize, right? And they've also got supply chain risk. And, you've got Google and Facebook, they've got regulatory risk. They're getting banned in China. They're getting reviewed in the US, and they're getting fined billions of dollars throughout the world. So if you're looking for no risk or you're running away from risk, the truth of the matter is the lowest risk thing you can possibly buy right now is Bitcoin, because there's no CEO, there's no corporate headquarters, there's no product. The product is simple. It's 1/21 millionth of all the money in the network forever. That's the product. So you're getting away from the board of directors and the employee base and the regulatory nexus and the competition. And you already know there's a demand for a non-sovereign store of value. And if you're waiting, right, fundamentally, it has to pass. If you're an institutional investor, anything you invest in has to pass the MicroStrategy test. And that test is 3-part, Brett. Will it be copied? Will it be banned? Will it be hacked? And we talked about this a year ago when I met with you guys. It's like, well, Bitcoin, will it be copied? 10,000 times, every one of them a failure. There's nobody with a straight face that'll tell you they've got a Bitcoin substitute. The proof of work network and the approach, the ethos and the engineering and the protocol makes it very unique as a non-sovereign store of value. So it won't be copied. Will it be hacked? No one can hack it. Will it be banned? Well, you might have wondered a year ago, but after Christina Lagarde, Jerome Powell, all the senators, all the Congress people, the Secretary of the Treasury, right, and the head of the SEC just noted it's all digital property. It's scarce. They might say speculative. It's a speculative store of value. But if it wasn't speculative, it would be trading at $10 million a coin right now. So the only thing that keeps it from going up by a factor of 100 is the fact that it's quote unquote speculative. But otherwise, it seems to me it's a lot more risky to buy gold. It's a lot more risky to buy a company, a stock, even name a big tech monopoly that's safe. Okay. Well, because if you're a monopoly, you're not safe. If you're not a monopoly, you're not safe for a different reason. So I think that the best thing you could possibly have is the volatility that keeps all of the conventional thinkers out of the asset, because that gives you a chance to buy it cheap. I think that if you say, well, what's the progress in 12 months? Well, when MicroStrategy did our due diligence, Brett, I couldn't find a single company holding $3 million of Bitcoin on their balance sheet anywhere in the public markets. Couldn't find anybody. And so today we have like 36 companies, and you've got MicroStrategy and Tesla that have taken north of $1 billion positions. You've got Square and Marathon that have purchased, $400 or $500 million worth of Bitcoin on their treasury. You've got a dozen Bitcoin miners. You've got 2 futures ETFs. And how would I put this to bed? I would say this, Brett. You remember the chair of the FDIC last week said they're investigating how banks can hold Bitcoin on their balance sheet and what the reserve ratio should be. And I looked at it and I tweeted. I said, when the FDIC finally approves banks to hold Bitcoin on their balance sheet, everybody will want to buy it, nobody will want to sell it, and you won't be able to afford it. So in this particular case, I think the same holds true, which is you're seeing the motion, you're seeing the 350% uptick. You have a lot of obvious liabilities that are holding back Apple and Google and Facebook from buying $50 billion each. I thank my lucky stars for those liabilities. When I was banging away on a computer buying Bitcoin as fast as I could at $9,500 a coin, and I bought $175 million worth of it in like 2 days, hoping to hell no one figured out I was buying it. While I was doing that, I consoled myself with the thought that it took me 3 months to get KYC'd and get the account, and they put me through hell. And if it's that difficult to be able to buy Bitcoin, then I figured that I'd done the work and everybody else was going to come after me and they were going to pay double or triple. And a year later, it still takes 8 weeks to get a KYC AML account to do institutional grade Bitcoin acquisition as property. And you pay 6x that much or 7x that much. When FASB cures the accounting, and I think there's consensus that we'll eventually go to fair market accounting, I just don't know when the SEC gives you a spot ETF, when FDIC lets banks hold Bitcoin on their balance sheet, right? At that point, you won't have these headaches, but you will be paying $500,000 a coin or $1 million a coin. And so be careful what you wish for.